The collapse of Bitcoin seems to have no end. Early this morning, Bitcoin hit $98,500, and that event is undoubtedly triggering extreme fear in the market right now, where the Fear and Greed Index is showing a level of 11. Because of this extreme fear, we're seeing Bitcoin holders closing their long positions. And on top of that, Bitcoin ETF flows have been negative for 4 straight days. At the same time, we're watching how the average retail investor in Ethereum, in Bitcoin, and across crypto keeps trying to buy every dip over and over again. And honestly, we're not seeing that behavior change at all. And until that changes, and until we see whales starting to buy aggressively against retail, we have to understand that we still don't have a real confirmation of a trend reversal. But not everything is negative, because if we look at Bitcoin's macro structure on the 1-hour time frame, I think you're already noticing what we're seeing here at Crypto Insight. And of course, we're going to break all of this down in detail. So we need to start by talking about the current state of market sentiment. In Bitcoin and across the crypto ecosystem, we're currently in a situation of extreme fear. Basically, after seeing such a massive and consecutive drop, the retail investor is now feeling very pessimistic about the market, which is normal. But of course, as you already know here at Crypto Insight, we always work from a contrarian perspective compared to what the retail crowd might be thinking. We understand them, of course, but that doesn't mean we should follow them. Just look at this. Over the past few days, we've been watching this blockchain chart showing the daily net change of holders, and this figure has seen a deep depreciation. That means those long-term investors who were previously positive on crypto and Bitcoin are now deciding to sell their Bitcoin at a very low moment. Right after witnessing these recent drops, they stop holding it and they sell. And now let me ask you, what's the intelligent strategy in the buy and sell dynamics of the financial markets? Is it smart to sell during a drop when the price is already way down here? Or if we had a crystal ball, wouldn't it be much smarter to sell way up here? Obviously, every investor wants to sell high and buy low. But what actually happens? It's because investors have emotions, and those emotions kick in when we see strong drops in price, especially when those drops are happening one after another like we're seeing now. Just look at where we're seeing this very negative net change in Bitcoin holding wallets, and look at where it's happening. Those sales are not taking place up here or up here. They're happening down here when the price has already collapsed a massive amount. So let me ask you, who do you think is selling their Bitcoin down here at a moment when it's obvious the entire market is terrified? I think the answer is simple. It's the retail investor. And what do we see in the Bitcoin ETF flows? What we're seeing is that since November 12th, we've had significant outflows, especially on November 13th. Basically, Bitcoin is being sold aggressively through the ETFs. And if we look at the historical data, you can clearly see this whole phase across the chart. But if we look at a shift in dynamics, we can say that everything started to change around October 13th. From that point on, what we've seen, generally speaking, with some exceptions, is a clear dominance of outflows in Bitcoin. And now we're going to scroll further down so you can see how heavily Bitcoin has been sold. As I said, this becomes very noticeable starting on October 13th, and we're going to mark October 13th right here. From this moment onward, what has dominated Bitcoin ETFs has been selling, and more selling day after day. Now, you already know my opinion about ETFs. We shouldn't treat ETF flows as something exclusive that automatically tells us institutional investors are the ones buying or selling. What I mean is, retail investors can also buy and sell ETFs. But when we take this data and combine with fear indicators and with discretionary technical analysis that tries to understand what institutions are doing, then yes, we can give real meaning to that information. So look at this. ETFs have been selling aggressively, and for now we don't see anything that suggests they've started buying again. And if we now look at how the retail investor is behaving when it comes to opening longs or shorts, we'll notice something very clear. Since early October, right when the price started to fall, what we're seeing is the retail investor buying Bitcoin like a complete maniac. What does this mean? Does it mean retail is positioning long in a smart or correct way? Absolutely not. That's not the point here. You have to see it like this. The retail investor bought here, got stopped out, bought again here, got stopped out again, and they keep repeating this pattern over and over during the entire drop. And you'll notice how they've been losing money on every single one of those market buys. What am I trying to say with this? That as long as we keep seeing retail trying to flip the market at macro levels, we cannot confirm that the market has already bottomed, nor that retail has capitulated. Because this is where I tell you, just like I've been warning you in previous videos, yes, we're optimistic about the crypto market. But in the last video, I also told you, honestly, I don't see anything that tells me we're about to explode upward right now. It really looks like there might still be a bit more downside before we eventually go up. Basically, we weren't seeing that immediate bullish continuation. But I'll also tell you, I didn't expect such an abrupt drop. So why did I say last Thursday that I didn't see anything clear suggesting we were ready to break upward yet? Among other things, because I'm seeing retail investors still making the same mistake, buying and buying non-stop. What I need to see is retail starting to sell aggressively. And for that to happen, we need to see some real buying aggression in Bitcoin's price coming from who? From the institutional side. That's the kind of aggressive buying I'm not seeing right now. And I can detect this by studying the buying differential between whales and retail investors. Until I see a sharp shift, one where institutions start buying fiercely while retail behaves differently, a shift that ends with retail finally panic selling as the price goes up, we cannot say that part of the process has started. When I finally see retail heavily biased towards selling and institutions stepping in as strong buyers, that's when we'll get the black swan, or the white swan, because I use the idea of a black swan to describe any high-impact, unexpected event, whether it's to the upside or the downside. And it'll be at that moment when, at a macro level, we can say, all right, retail has capitulated. Now we can move up. I couldn't make that claim last Thursday, and I still can't make it today. But don't worry, because now we're going to see how we can track price action to study and evaluate when this event might actually happen. As you can see, at first glance, we're in a very, very interesting market context right now, and I'll explain all of this to you. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Alright, now I want you to pay attention to this. Notice how Bitcoin, right now the difference isn't as obvious, but a few hours ago it was much more dramatic, is sitting at around -1%, while the rest of the altcoins, with a few exceptions of course, are actually in the green. Visually, it's much clearer when you compare them side by side. If we look at the total market chart, this one includes Bitcoin, and here we have total 2, the one that excludes Bitcoin. I want you to pay attention as we switch the screen back and forth quickly. Notice how, in the total chart, we've had a bearish overextension that we don't see in the rest of the altcoins. To make it clear, in total 1, we have an additional drop that does not appear in this other chart, total 2. And remember, in total 2, Bitcoin is excluded, as you can see at the top. So why did Bitcoin suffer more in the first place? Because it's the queen. It's the one that captures all the attention. Many investors and many traders operate Bitcoin far more frequently, but I always stick to the main idea. Bitcoin is the big showcase, the star of the entire crypto space. So if institutions want to scare the population, what do you think they'll use? Dogecoin? Solana? Cardano? Or will they hit Bitcoin so it sets the perfect example? I think the answer is obvious. That's why we've seen this overextension. But now, I want you to pay attention to where this overextension in Bitcoin has reached. On this daily time frame, take a look. We're working with this structure, which is nothing more than a macro bullish channel for Bitcoin. Look at the anchor points. They're very well aligned. And where are we right now? We're basically sitting at the base of the channel. Does that mean retail has capitulated with absolute certainty? Well, you've already seen in the previous chart that retail, in their obsession to catch the exact bottom and reverse the market, has done nothing but buy the dip over and over again, compulsively, all the way down. And you've seen how that has turned out for them. So let me ask you, do you know if tomorrow Bitcoin could do this, and then maybe do this afterwards? You don't know. And because you don't know, let me ask you something else. Would you really want to be part of the group of buyers who keep getting it wrong while the price continues to fall? The answer here is also obvious. I'm asking simple questions, but I think this really helps clarify how we look at markets here at Crypto Insight. And of course, keep in mind that right now we're doing long-term technical analysis using using the daily chart. So, what else are we seeing in Bitcoin's price action? Take a look at this very important defense zone. Notice how the price keeps trying to attack it again and again, the same structural level. And yes, it's allowed to make a trap there, but even after that, it keeps attacking and still can't break through. And now Bitcoin has come back to a key point. What we need to see, of course, is whether the price continues to be defended in that zone or not. And if we also look for an institutional target from this entire distribution, we can see that the target is roughly around the same price area where Bitcoin is right now. But look closely, it can still fall further. In fact, we're about to see how the rest of the cryptos are all telling us the same thing. They can continue dropping if that's what the market wants. Trying to identify the exact breaking point right now is complicated. And remember, in crypto, V-shaped reversals almost never happen. When Bitcoin wants to change character or shift its dynamic, what does it do? It always works through a deceleration phase, a zone where it can accumulate, and then it moves. But it doesn't just flip in a perfect V-shape, it needs time. And that's exactly why, now that we're at a key point, this is what we need to evaluate. Are they going to want to land the price right here, or is the drop going to continue? Well, let me tell you something right from the start. Structural traps exist. What does that mean? It means that if they really feel like it, Bitcoin can create a trap. Of course it can, even in a scenario where we still remain overall bullish. In the same way, the price might want to react at this ancestral defense zone, which lines up with the alpha angle and the base of this channel, and that would basically complete a projection where institutions distributed heavily up here and marked the target down here. It's a hot zone, something we absolutely need to monitor. It's important, it's relevant. All right, so what are the rest of the cryptos doing? Take a look at Ethereum. On the daily time frame, we're also seeing long-term technical analysis. I've put on screen a volume profile of the entire macro range because it's undeniable that Ethereum is currently inside a macro range. It's like playing tennis, up, down, back and forth constantly. Since we're inside a range, I think it's very interesting to work with the full volume profile. And what stands out to me at first glance is this low volume node around the price level of $2,888, and also this high volume node whose peak sits around $2,552. I'm looking at these levels, and I've marked them on the chart with blue lines because they are key spots where the price can react. These are potential zones where a hypothetical future bottom could form, and as you can see at the current price level, something about Ethereum really grabs my attention. Another key point to consider, and that's the value area high. The volume profile, among other important levels, includes one called the value area high, and of course also the value area low. Between the high and the low, you get the full value area of the entire volume distribution, and both the value area high and the value area low are important reaction points. So now, on my chart, let's zoom in so this becomes even clearer. When the histogram changes color to a dark gray, I have it configured this way, sometimes to white. That boundary represents the value area high, and that's exactly where Ethereum is right now. So, let's also draw the blue line there so nobody complains later. Let's remove the volume profile, and let's say these are the levels of interest we need to monitor. Basically, we need to watch how the price might eventually be landed either on this zone, and we'll see what that implies, or maybe on a lower zone, and we'll also see what that implies. But these are key levels where Ethereum could potentially form a bottom. And yes, could the current level be a potential turning point? It could be. It's possible. Now take a look at assets like XRP. We have here a legendary macro defense zone. And if you ask me, can the price fall further? Of course. Look, if it drops all the way down here and even does something like this, would anything bad happen? Nothing at all. There is still room to fall. We continue to see retail investors making the same mistake, buying throughout the entire drop. And for now, we're not seeing any real signs of institutional buying stepping in. In fact, if we look at Bitcoin ETF flows, we can clearly see they keep showing outflows and more outflows. But that doesn't change the fact that on a long-term macro level, we're actually at some genuinely interesting points. Do we have confirmation that we're ready to move up? No, We don't. Now, looking at Solana on the daily time frame, I also find it very interesting, because here on screen, you're seeing the structure we're working with. Honestly, it looks like a very clean line. But what really interests me about this chart is the following. If we look at this bearish impulse, what we have right here is a double V. This is a hidden trend line, which means this does not exist. This is the real one. And from that real trend line, we form a Z structure. And wow, it's very clear that this is a Z. Here we have the Z trend line, which is that structure the price goes back to respect after breaking the wedge. And yes, the price went back, respected it, and once it finally broke it, and broke it with a flat pattern, that's where everything completely fell apart. And where did the price go? Straight back to the trend line where that structure was born. Now, does the price have the obligation to break the macro structure after all of this? Meaning this trend line right here? No, it doesn't have to. We're simply at a key level. Could it create a trap around this area? Yes, it absolutely could. So what's our job? Our job is to watch the deceleration process, to see when that starts to form, and to look for certain confirmations that allow us to say, friends, we've hit the bottom. The fear index is at 11. People are terrified. We're seeing holder wallets dropping sharply. People are panic selling at the bottom. You're already seeing how the puzzle keeps building itself. And just to be clear, here at Crypto Insight, today we do not see confirmation that the price is going to go up immediately. We don't see it. But ever since last Thursday, we've been on alert, watching for when that moment might arrive. And on Thursday, I told you I wasn't seeing any signals that the price was ready to go up yet. And if the price isn't ready to go up yet, it means the storyline can continue. And today, I'm telling you the same thing. Right now, we have nothing that suggests the price should move up, but we are in hot zones. In my view, Bitcoin has overreacted on the way down because institutional players want it to serve as an example. They want to scare people. And right now, people are already extremely scared. They want retail investors to sell, to capitulate. But I'm still not seeing whales clearly shifting the trend, and I'm also not seeing retail starting to sell aggressively in the wrong way. Like I told you, before any of that happens, we first need to see something important on the chart. And yes, they can do whatever they want in the meantime, but at some point, we need to see a meaningful event. That important event is something we'll definitely try to anticipate, and over time, the market will start giving us certain confirmations. And once those confirmations appear, then I'll be able to say something like, in my opinion, we've already hit the bottom. Retail has capitulated. Now we can look upward with more confidence. That's the message I'll want to give you in the future. For now, and I think I've explained all these concepts clearly, we cannot say that today. And now it's your turn. Tell me what you think about the market in the comments of this video. I'll read them later. And if you found this advanced technical analysis interesting, make sure to like the video, subscribe to the channel, and click the notification bell so YouTube lets you know about upcoming posts. Also, share this video with your friends, family, and other crypto and trading communities. They'll definitely appreciate it. Good luck with your trading, and see you next time.